Good morning, ladies and gentlemen. Thank you for joining. Please be patient. The webinar will start in 2 minutes.
Hello， 歡迎嚟到第18集嘅時事1分鐘，我係 Edwin。喺呢集呢，我哋係會回答一個朋友啦，阿 May 嘅來信啦，而係好想知道點解我哋響第4季係睇好中國嘅股市市場嘅。最主要係有3個原因嘅。咁首先講第一個啦，亦都係呢個 first in first out 嘅哲學啦。亦都係代表咗中國係第一個國家啦，代入呢個疫情啦，亦都係第一個國家將個疫情控制得好好嘅，亦都令到佢嘅經濟啦係反彈得好快啦，特別喺第3季入邊啦，無論係響廠家零售啊，抑或係服務行業都好啦，亦都係見到好理想嘅顯示嘅。俾一個例子啦，就係講汽車銷量啦。當其餘啲強國啦，譬如話係美國，抑或係歐洲啦，嘅汽車銷量仍然係受好大嘅打擊啦。中國響第9月入邊啦嘅汽車銷量比往年啦係提升咗12.8%嘅。咁響經濟學方面啦，我哋會覺得汽車銷量啦係一個好好嘅經濟指標嚟嘅。至於講緊第二個原因啦，疫情嘅爆發啦，亦都會影響到好多國家，特別啲強國嘅財政預算啦，會係響負雙位數字嘅情況之下，亦都所謂嘅 fiscal deficit。同中國嚟比嘅話，只不過會係單 3.6%。除咗財政預算啦，響貸款基準利率啦，好多強國已經係響負嘅情況之下，亦都所謂嘅 negative interest rate。比如中國嘅5年嘅利率啦，仍然係響4%。呢兩個經濟顯示亦都係代表咗，如果中國係需要再刺激嘅經濟而反彈得。
Hello and welcome back to Just 1 Minute Insight. In this episode, we want to talk about some of the reasons to be positive on the China market. Firstly, China was the first economy to be badly affected by COVID-19. But given the measures that they have taken, the country is now back on an economic recovery path. If you look at the latest economic numbers released by China, the economy grew by 4.9% in the third quarter of 2020, confirming that the economy is back on track. Secondly, China has a lot of policy flexibility to deal with any slowdown in the global economy. The policy options include cutting interest rates, as well as increasing government spending. And thirdly, the economic and the capital market reforms that are taking place in China will attract capital. Those are some of the reasons to be positive on China. Thank you, and we will see you in the next episode. Goodbye.
Hello， 大家好。首先感谢大家的收看以及回馈。这一期主要是回复大家对我们在此前第4季度市场展望以及资产配置的问题。对于我们看好以及增持中国股票的原因有3。首先，中国在成功对抗疫情过后，开始交出亮眼的经济复苏成绩。当中，在第3季度，中国工业生产、零售、服务业和房地产投资都表现好于预期。当中的例子，如在欧美汽车销售仍然处于一个低迷的时候，中国在9月份。
Hai, selamat datang ke Seminit Saja bersama saya, Reza dari UOB Asset Management. Kecenderungan kami lebih pada negara China untuk strategi pelaburan suku keempat telah menimbulkan beberapa permintaan untuk penjelasan yang lebih lanjut. Terdapat 3 sebab mengapa kita lebih cenderung pada China. Pertama, tema first in first out. Seperti yang telah kami sampaikan dalam episod sebelumnya, China adalah negara pertama yang terkena wabak dan sekarang negara yang pertama berjaya mengatasi wabak ini. Ekonomi China terus pulih melalui suku ketiga dengan jumlah pengeluaran industri penjualan runcit, perkhidmatan dan pelaburan harta tanah berada di atas jangkaan. Contoh praktikal, penjualan kereta pada bulan September meningkat 12.8% berbanding tahun lepas dan berbanding dengan jualan kereta yang merosot di Eropah dan Amerika Syarikat. Dari perspektif ekonomi, penjualan otomotif biasanya merupakan petunjuk ekonomi ke hadapan yang baik. Kedua, China masih mempunyai banyak ruang untuk mengubah dasarnya sekiranya berlaku penurunan ekonomi. Tidak seperti
Good morning and Happy New Year. Hope everyone is doing well in 2021. So thank you for your precious morning to join our sessions with UOB Asset Management today. So I'm Andrea Chan, I'll be the host for today. Throughout the webinar, you're welcome to join us in our discussion by posting your questions with the chat functions on your screen, and we will pick up some of the questions for our discussion later. You might be curious, what's the whole session about? And yes, UOB Asset Management is launching a China fund known as the Great Dragon Fund. Investing into China fund is not something new to the market. I believe there are more strategies when it's come to invest into China. But why United Great Dragon Fund? Let's find out more from this session. So today we are delighted to invite Mr. Edwin Lee to share on the market outlook of China and also the interesting of this fund. So Mr. Edwin Lee, as you know, he is Chief Marketing Officer, joined UOB Asset Management in October 2018. So he carries with him more than 20 years in experience in various financial industry. Yeah. So before joining UOB Asset Management, he spent a few years in international fund manager, where he has successfully made the company presence felt among banks and independent financial advisors known as IFS, where he also successfully brought the interest in Indian market to Malaysia investor. So without further ado, maybe I pass the floor to Edwin. So Edwin, the floor is yours.
Thank you. Happy morning, everyone. So today, I think, as you know, as what been pointed out by Andrea, I'll be sharing with you about the Great Dragon Fund, right? And also a little bit on China. So, which is something that no longer I need to introduce to talk about the history of China. I think most of you would have known very well what is China all about. So what makes this particular fund different, and what makes the name of a Great Dragon emerges from this particular fund? Okay, let's start with the first slide. Just a little bit explanation of transition of a Great Dragon. Back then, in 2001, that is where the dragon actually awake. Why? Is because in 2001, China actually joined WTO, World Trade Organizations, and started to open up the economy, right? And from there on, the economy has been powered up. In 2001, there are still people underestimating China, but when it comes to 2008, which is the next one, right? There is no longer a doubt about China, and from 2010 onwards, whatever you have heard about China is all about the rise of China, okay? Especially after they organized the Olympic. And in 2010 itself, China overtook Japan to become the second largest economy in the world. But what is the Great Dragon all about is that this is no longer the rise of China, but it's the world of superpower in making, right? This is soon to be China, right? And how does it gonna be? How is it going to happen? It's not only what we are saying, it's also what CNBC has just claimed over the Christmas, that they are expecting China to overtake US as the largest economy in the world in 8 years from now, right? And this is what the superpower in making. And that's how it comes to this particular China fund that we are talking about, United Great Dragon Fund. And this is a fund that invests into the future of China, tomorrow of China, okay? And how to invest tomorrow in China, it is all about innovation. This is what we believe. The future of China, the tomorrow of China is about innovation, right? These are the few themes that I'm going to share with you. I'm not going to bore you with a lot of economic data because I don't think so. You only hear from us. You have already heard many times the economic data, or even you can read from the media itself, the power of the economy itself. So I'm going to share with you something that you might or might not heard about it. Okay, that is something that's less appearing in the media, which is the first one I would like to share with you is Made in China 2025, or in short, they call it MIC 2025. I like to put a caveat over here, yeah. There's no political agenda over here when I say MIC. Yeah? It somehow is being mentioned MIC 2025. That is Made in China 2025. Okay, what is Made in China 2025? It has been coined out in 2015 by Premier Li Keqiang. Right? You always heard about Xi Jinping. Okay, Xi Jinping is the president. Okay, and you have the second liner, the one that lead the government, that's called Premier Li Keqiang. Right? In 2015, he actually coined out. He actually announced the Made in China 2025 initiative, which is the initial objective, the main objective of China to achieve 2025 is to move away from a world factory, right? If you still recall, back about, I think 6 years ago, 5-6 years ago, you recall, early days when DVD player was introduced, okay? Most of us, it cost you about a few thousand ringgit to buy a DVD player. And subsequently, in the early 2000s, what happened is that when China came out, you have a DVD player that costs only 100-200 ringgit. So what happened is that it's sort of like inferior player, inferior product. Okay, so that is what being perceived about China. And that is what China want to move away from. They do not want to perceive that produce inferior goods. They want to be someone that is producing high-end goods, right? So there's a first objective to move away from being producing inferior products into a high-end product. And second thing is that the key thing to share with you is this Made in China initiative is actually trying to achieve at least 40% of all the products content has to come from China by 2020, which is last year, right? And they're supposed to achieve in the next 5 years, 70% of all their products are supposed to be domestically owned. Meaning 70% of the content of any product in China has to be domestically owned, right? That is what China is trying to achieve, to be self-sufficient. And among all these things, what I would like to share with you is that one particular industry actually being highlighted here is semiconductor. Because to the government perceived, semiconductor is actually the core of the entire Made in China 2025 initiative. That is what the government is trying to look for. However, due to the backlash that you've seen in 2018 from the US and from the European side, okay, this Made in MIC 2025 somehow or rather is being less emphasized, right? I think you have not really heard about MIC 2025 after 2018. Okay, but let me just assure you, the government does not intend, the government in China do not intend to scrap this particular plan. A very good example will be last year, an additional to 1.4 trillion US dollar has been pumped into MIC 2025, right? Imagine from earlier on, they're only investing around 300 billion. But now they're pumping 1.4 trillion due to the slowdown of economy due to COVID-19. They're actually pumping even more money to make sure that MIC 2025 is achieved. Okay, and that is the objective of MIC 2025. Next slide, I will share with you something that I coined out 5-5-10. What does the 5-5-10 when it comes to MIC 2025? Is a 5 principle that you have to understand, 5 tasks the national government is going to do, and the 10 key sectors that the government is trying to focus, right? What are 5 principles? Forget about all the 5. I'm not going to bore you with all the 5. I would like to just emphasize 3 things over here. First one, it has to be innovative driven. That is the first principle. Second principle, product must be in quality. No longer inferior, you touch and go product. Okay. Third, it must be environmental friendly. I think every one of you probably have known ever since Donald Trump pulled US out of the Paris Accord. Okay, China has been leading the world in terms of environmental friendly as well as fighting climate change. Okay, these are the 3 principles that you have to know. Okay, and of course, I'm going to bore you with all the 10 sectors, explaining one by one. but I will share with you among all the sectors. I'm going to pick 4 sectors that I will share with you subsequently. And just to share with you in the next slide, in fact, you are seeing the trend has been moving from a very much, back in 1996, a very much inferior product and no value added product, to 2016, you have started to see most of the products that exported by China are slightly higher quality, all right? And today, there's no doubt there's a lot of high quality products that China has been producing. And over the years, you have seen the brands of like my favorite, Huawei, okay? You have heard about Xiaomi, you heard about Lenovo, right? Which IBM failed to penetrate into the PC market, and it's been taken over by Lenovo, and Lenovo make it a success. BYD, right? Anyone knows what it means by BYD, right? BYD, I think you know, is also owned by Warren Buffett. It's one of the largest car EV, electrical vehicle producer in China. Okay, BYD stands for Build Your Dreams, right? So that is also another brand that's come out. And of course, very close to our heart is Geely, right? And to know about the quality of the product, ever since MIC 2025, is that you can just simply look at Proton. What happened to X70 and X50 when it came out? I still recall the last time I used a Proton was back in early 2003, probably. I own a Vera. I bought a Vera. I'm not sure how many of you recall, or you're old enough like me to recall. Back in 2003, if you were to buy a Vera, right? Either, hopefully there's no regulator here, you have to pay under table to the salesman in order to get your car quick, or you actually have to wait for 6 months in order to get your Vera, right? That was back then. The reason why was because you can't get any alternative, because Vera Proton is the cheapest car available in Malaysia back then. But today, despite the competition, you are seeing the waiting list for X50, if I'm not mistaken, is at least 6 months we are talking about. And this is despite without any government help, right? So that is what I'd like to share with you, the images. For those of you who have tested your X50, you have no doubt about the quality, all right? I am quite amazed. In fact, I'm very tempted to get one, right? So that is what I'd like to share with you. Okay, the next one is the next big theme of China, which is what gonna drive China from now on, is the word innovation, right? Innovation is a key thing that I'd like to share with you. I do a little bit of reflection in the next slides. Look into all these innovations idea, all these innovations that's been mentioned over here. If I were to ask you, if all these innovations are coming from one country, which country do you think is capable to come up with all these ideas or able to come up with all these products? You will never say US anymore. Neither you're going to say Europe. Probably the closest you are going to say is probably Japan. But let me share with you, all these ideas are coming from China, and it's real. All right, it's not just an idea, they are already doing it. From 3 artificial moons, highway that you charge your EV by itself by running on the road, okay? A parallelist A taxi, the world's largest solar panel, floating solar panel, 6G technology. I'm not talking about 5G, yeah? It's 6G technology, okay? Imagine that. Forget about Malaysia, don't talk about Malaysia. Talk about US. US is not even anywhere close to 5G. And today, China is really talking about testing on their 6G technology, right? Artificial sun, transform a desert into plantation. You know how difficult to plant anything in desert besides cactus. But today, China has the technology to convert a desert into plantation, right? And I think for those of you who are following social media, you probably heard about it, the I follow you smart luggage, that you don't need to push, it will just follow you, right? These are all the innovation coming from China. And there's no doubt, China, the future of China is all about innovation. Next slide, I will share with you a little bit in terms of statistics. It will share with you in years to come, the expectation of the amount of capital expenditure that you're going to throw into the industry in China are very much innovation driven. I'm not specifically saying only technology, it's all about innovation, right? Look into 5G, look into EV, AI, ultra high voltage, data center, industrial, right? Railway. These are all things that you are expecting the capex to spike up in the years to come on China, and it's all about innovation. The next one I'd like to share with you, the unicorns company that's coming out from China is only slightly inferior compared to US, but let me share with you, you won't be surprised in next 5 years, China is going to overtake US, right? You are going to see all these things. Right, next slide, I'm going to skip. I don't want to bore you with all the statistics. Let's talk a little bit. I'm just going to talk a little bit about China economy, the power of this economy. Next slide. Right, the amazing about this country, in the last 70 years, how has this country emerged? From a country that is very much powered by primary, meaning plantation, and moving towards 2001, 1996, 1998, and 2001, they start to move into secondary industry, meaning a very manufacturing base when it started to open up in 2001. And subsequently to today, China is about service. Okay, China economy is already driven by service industry, which is the tertiary industry. Probably some of you might not know, there are not many countries in this world which is a tertiary driven industry. Tertiary means it's the most advanced, right? Malaysia, we are moving towards the secondary. China is really in the tertiary, right? Which is service oriented. One of the probably the common countries that you heard about is tertiary driven economy, which is only Switzerland, right? Next one. And one of the things that I am amazed with China is how they actually elevate the poverty, right? Over the last 40 years. In the last 40 years, 800 million people has been brought out of poverty. Okay, imagine that. How many countries in the world has 800 million people? There are only 2 countries. Okay, either China or India. And in 40 years, today, there is no poverty in China, no extreme poverty in China, right? And just for your information, it might not be stated in the slide here. The last year itself that China is supposed to eradicate poverty is the year 2020, which is last year, right? And as of last year, there is still around 10 million people who are still under extreme poverty. But it was the Chinese government commitment that there shouldn't be any poverty. And what they did is that despite the challenges of COVID-19, the lockdown, they still managed to pull out all these 10 million citizens, 10 million PRC citizens out of poverty. And that is what has happened. Next slide. All right, the transportation success in China, I think I don't need to explain to you. For those of you who have been to China, you probably have already experience the kind of high-speed rail that China has, right? And today you're talking about what, 800 million kilometer of high-speed rail that you can see in China, right? That's how much the railway they have in China. Next slide. And this is how the dominance of China in the world economy. Back in 1980, is as much as China is negligible. It's less than 2% of the entire contribution to the world GDP. But today, China is closing to about 15% value of the world economy. That's how powerful this economy is. And China today, dominant about 1/3 of the world economic growth. Meaning, for the world to grow, 1/3 of it has to be dependent on China. And that's how important this economy is. Next slide, we'll share with you. This is how China economy has been powered on to grow year after year despite all the challenges that you have seen in the tech bubble in 2000 and even in 2008. I'm not sure how many of you know, in 2001, there is something being coined out called Target 8. What it means by Target 8 is that China has to grow at least 8% GDP growth in order to make sure that they elevate poverty and to make sure there is sufficient jobs being created. Okay, and imagine that in 2008, the whole world slips into recession. Okay, almost no country in the world is spared from recession. And despite the challenges, China rolled out a stimulus to make sure that the economy continued to power at not only grow, but growing at 8% pace. And they successfully did that, right? And this is how amazing this economy is. And next slide, I'm going to share more current affairs with you. Expectation for 2021 is that China will grow at 6%. And let me put a caveat here. That is not the target set by the government. The target that the government actually softened the target for the next 5 years growth, okay, but they did not specifically mention how much they are expected to grow. But a lot of economists are predicting, they are expecting to grow around 5.5 to 6.5% in the next 5 years, okay? But for 2021, China is expected to grow at 8% pace. And to share with you, in 2020, last year, China is probably the one and only major economy in the world that does not slip into recession. Okay, and that's how strong this economy is. Next slide. It's a bit not too good news over here, yeah. There is something just being introduced by China called dual circulation. And what is this dual circulation all about? It is internal and external circulation. That is something that in the next 5 years, the Chinese government is going to focus, okay, which is domestic circulation and external circulation. What is domestic or internal circulation is that first thing is the Chinese government want to cut off the excess supply. I think you probably know that in the early 2007, 2006, because of the rapid industrializations and the rapid infrastructure building in China, China was very hungry for raw materials. Okay, and because of that, there has been so much raw materials being produced in China to the extent today, when the economy slumped, right, in 2008, when the world economy slumped, today there are excessive of supply in China. So that probably will give you an answer. You probably heard a lot, criticism on China. Why, when they actually built the ECRL for Malaysia, China is only using their own materials? The reason why is because one of the objective of Belt and Road Initiative is actually to export the excess supply that has been built up during the early years. Okay, that's why China has been using their own materials. So that is something that internal circulation, which means one of the objectives is to clear up the excess supply that is built up in China. And second thing, China want to be technological self-reliance. They want to be rely on the own self when it comes to technology, especially when it comes to chips. Okay, and when it comes to, so probably you heard about all these things a lot. Of course, there are many more, but what I'd like to share with you, domestic circulation is very much focused on how to rebuild the internal supply chain, okay, which is they want it to be self-sufficient. And when it comes to external circulation or international circulation, okay, this international circulation is very much focused on liberalizing Chinese economy sectors, and as well as open up the economy more for domestic foreign direct investment into China. Okay, so conclusion, what does it tell you over here is that it regards whether it's internal circulation or external circulation, it is still very much domestic economy driven. It's still very much focused on Chinese economy. And how come China suddenly from, helping many other countries to grow, suddenly they want to be very focused on their own domestic economy? Two reasons. First thing is that COVID-19 actually has brought to the realizations that China felt the external environment doesn't seem promising. So which is why they need to build up more on their own domestic economy. And second reason, the tension that I have with US, okay, make them realize that they need to stay a little bit more low profile and more self-reliant, which is where they want to build up their own technology capability. So this is the dual circulations that I'd like to share with you. And the not too good news is that for those, any country who are heavily dependent on China to consume their raw materials or WIP products, okay, they might be hit. They might be hit in the future. Right, next slide I will share with you is on A-share. Okay, next slide. Why A-share? Why do we launch an A-share fund? Next slide. Generally, most of the China funds that you can find in Malaysia or you can find around the world are very much three market-centric: A-share, H-shares, or even the US ADRs, right? So H-shares, I mean the offshore market, the H-shares, you know, if you look at it, how many stocks can you pick when it comes to innovations? They are quite limited. Okay, for US ADRs, I can say you can is as good as you can kiss goodbye for US ADRs, because due to all those tough measurements that are taken by the US government, especially the latest one, besides banning the SMIC, you know, the latest one, they actually banned the 3 telcos of China, delist, not ban, delist the 3 telcos in China, China telco in US ADRs. So these are going to hurt the sentiment, all right? And you don't expect anymore the Chinese company will seek to be listed in US ADR anymore, learning from this particular experience. And on top of that, just to share, you know, it might also deter other foreign companies to actually listed in US in view of this kind of experience that you have seen in the Chinese company. So that probably left you with the best option, which is A-share, okay, where it's actually very much domestically based. Next slide. Right. This is what generally you probably heard about it. As China is growing more influence in the world economy, growing bigger in the world economy. A couple of years back, I think 1 or 2 years back, you have heard that China A-share has been put into the global benchmark like MSCI, right? And you will expect there will increase more weightage into China. From over here, they are stating, you know, they are expecting currently weightage about 5% from all the MSCI benchmark on A-share will to increase to 20% in the near term. So from there, you're expecting another 390 billion renminbi is going to flow into the A-share market. So this is what being expected in China. Next slide. Right. This is commonly being shared by a lot of analysts will tell you that, you know, the opportunities in China, besides dependent on foreign money, but also the household money, right? So what the slide actually tells you is that they compare with the developed market like US as compared to China. In US, the penetration of the domestic people, the domestic household into their stock market is close to 30%, and China is less than 10%. What does it tell you is that the slide's trying to tell you is that they're expecting more if the Chinese people were just to be set on par like what the Americans are, up 30% of their asset allocation into domestic economy. They are expecting another huge inflow of money into the equity market just by domestic money itself, right? But then again, I put a caveat here. I might not too agreeable with this particular point. The reason why is because we have to always understand the culture in US and culture in Asia, especially in Asia and China, is very much different. All right, we as a Chinese, we are being brought up to think about putting your money into fixed deposit. You are always being taught, if you have money, buy property. So probably the culture would not actually will not actually shifted to what the US or the Americans are doing, right? So whether you believe on this particular chart or not, on this particular analogy or not, I leave it back to you. Next slide. Right, so I'm going to talk about the investment strategy of this particular fund. Of course, there are many stocks that we actually invest, many strategies that we invest, but for today, I will just share with you 4 main themes for this particular fund. Next. First, technology, which is very common when it comes to innovation. Technology, you cannot draw a line, okay? Biotech, clean energy, and of course, consumer, right? So I'm going to share with you one by one. First thing, let's start with technology, which is quite common. Earlier on, I shared with you that semiconductor will be the core for MIC 2025, right? The core of MIC 2025. So meaning, technically, if you were to invest into any of the semiconductor company, you shouldn't be wrong. You shouldn't be wrong. But for us, what we felt is that it's too early to silang, or we call it the show hand, right? You show hand all your investment into the semiconductor. Why do we say so? Because we have to understand, today, the semiconductor industry in China is still behind. The technology of the semiconductor industry in China is still behind the global players, or even to its neighbor, which is the TSMC, Taiwan Semiconductor. It's still, when you talk about Taiwan Semiconductor, you're talking about like what? Currently using 5 nanometer chips, and they're going to about 3 nanometer. Whereas China, currently they are still around double-digit nanometer. But what we believe is that over time, China will catch up. All right, and I won't bet against that. I believe it will catch up. But for time being, how are we going to play on this particular theme on semiconductor? We actually invested into a company that produced the machine, okay, to test on semiconductor chips. So meaning, as more R&D were put onto semiconductor, the more they need this kind of machine to test the effectiveness of their semiconductor or their computer chips. Next slide. Right. When it comes to 5G, I think all of you know what is the importance of 5G. Okay, other than having your driverless car, other than connecting all your devices, 5G is also very important, especially when it comes to a big country like China. Think about it. If you need to do a surgery, most of the good doctors normally are very much based in the urban area, like Beijing, Shanghai, Guangzhou. It's quite common. Okay, and what if there is a patient need to do an instant surgery in the West, for example, Xinjiang? What are you going to do? Instead of flying the doctor over there, today, with a 5G technology, you can do a remote surgery. And it has been done in China. And that is one of the importance of 5G. Okay. And for this one, I don't have to tell you, 5G is important, and 5G is a big thing in China. So, but you also probably heard about the backlash of 5G technology when China's 5G technology, where you heard there are many countries, especially the Americans and even UK, are rejecting 5G technology. And I'd like to take a quote over here from the Chinese ambassador. Okay, this is a former Chinese ambassador. I think he just retired end of last year. His Excellency Liu Xiaoming. All right, he's a Chinese ambassador to UK. And this is a quote that he actually used when UK rejected Huawei 5G technology. Can you click? What he actually said to the world in BBC was, history turns full cycle. In 1793, Chinese Emperor Xianlong told British King, we don't have the slightest need of your country's manufacturers. So that start to mark the 150 years decline of the Chinese economy. And in 2020, UK tells China that it has no needs of China's latest technology, referring to 5G. And what he says is that I do not know what will happen in the next 150 years, right? So that is for your food of thought today. So for those of you who like to know more about what are the importance about 5G, feel free to play back our 1 minute insight on 5G. It's on season 1, episode 19. You have 4 languages over here. You have the English, which is a common one, Bahasa, Mandarin, and the one that is actually hosted by me, which is in Cantonese. For those of you who like to watch, just feel free to watch about our sharing on the importance of 5G over here. You can also find it in YouTube. Right, the next thing is clean energy. Ever since the industrializations in 2001, the rapid industrializations actually has brought to a lot of pain to China, especially when it comes to pollution, right? Air pollution, you're talking about the river pollution, so much of pollutions actually happened to China. And when the economy has started to grow more self-sufficient and more greater, China has imposed policies to fight against climate change. And they also has their own internal policy to have a very strict restrictions when it comes to pollution control, right? So when it comes to, of course, when it comes to all these things, what they want to tell you is that they will be focused on clean energy. China is a very much clean energy driven economy. That is what the Chinese government to achieve ever since 2017. All right, the Chinese government have been very emphasizing on clean energy. So probably you will ask me this question. Then if clean energy has been emphasized ever since 2017, so there's nothing new. Why should we invest? Why do you say this is one of the very unique strategy? The uniqueness of this strategy is because in just September 2020, just September last year, which is about 4 months ago, President Xi Jinping in the United Nations General Assembly announced China will be CO2 emission peak before 2030, which is 10 years from now, and they will achieve carbon neutral before 2060, right? For those of you who don't know what I mean by carbon neutral, meaning you will not release the toxic gas into the air. For example, you will not drive those cars which keep having fuel combustion, all right? You must at least have a hybrid, okay? And for any emissions coming from your hybrid car, okay, because it still use petrol, there must be a way to contain it from releasing into the atmosphere. And think about what's going to happen to all those other factories, like oil and gas factors, your plastic sectors, your plastic factories. What is it going to happen, right? When you are not allowed to emit any carbon into the atmosphere. That is required a lot of support from the government, and a lot of innovation has to take place. So imagine that from now until 2060, I don't know whether I'm still there to watch these things to happen. But then again, what we can see is that from now to 2060, you can expect a huge investment and a lot of innovations that will be coming up from China, right? And of course, if you ask me today, is there any country in the world that is carbon neutral? There's probably only one country that I know of that is carbon neutral. That's Bhutan. All right, and you can know the Bhutan economy, how small is the Bhutan economy? Probably it's not even the size of Selangor economy, right? That's how small the economy is. But today you are talking about the second largest economy, or soon to be the largest world economy in the world, right? Going to be carbon neutral. There is a huge concerted effort needed to be when it comes to innovation. And for that, I will share with you one of the stocks that actually we pick in the next slide, which is a battery producer. All right, this is a company that produces car batteries. I think you will never go wrong. We go for car batteries. If you still recall, and these things the innovation is coming better and better now. I think you still recall when the first Toyota Prius, which is a hybrid car using car battery, or EV car using car battery, there was a lot of concern the battery will actually be spoiled. It costs you what 20,000-30,000 to replace the battery after 5 years. So today the battery actually lasts longer, okay, and you can actually driven more mileage. That is what is expected, and this is one of the company that is one of the major producer of batteries in China, including car batteries. All right, next slide I will share with you is on China consumer. Recall to you, how many of you recall this incident, this particular video clips that you have seen in the media, right? The Chinese people has been rushing in I think in Thailand, if I'm not mistaken, to grab for the prawn when during the buffet, all right? So it has been criticized that China is very greedy, no manners, this and that. And after so many years, finally, there is someone out there help the Chinese consumer to speak out, which is Uncle Roger. All right. So what Uncle Roger said is that, you know, he explains when Asian people go to buffet, we don't eat until we are full, right? We eat until we recuperate the cost of the buffet. And that is good financial planning. All right. So that is what Uncle Roger has justified for China. All right. I'm not going to promote Uncle Roger over here too much. But what I'm trying to share with you is that you have heard about all this while from all the fund managers, from economists. When the people get richer, all right, from a low, the B40 or the poor people, when they get into middle class or richer, the tendency is that they tend to eat more meat. All right, so you will never see there will be Chinese people, you know, in a buffet hungering and fighting for vegetables. They were only fighting for meats, right? And probably I'll just share with you one of my experience over here. Back in 2008, early 2008, before the Beijing Olympic, I was there in Beijing. And, you know, because back then the food in Beijing was not so good, you know, either very salty or very oily back then. But today, I think you all know it's super, okay? Back then, what happened was because I'm not too full, because I follow a tour, I'm not too full. So I went to KFC, you know, Kentucky Fried Chicken, to buy, of course, you buy a fried chicken to eat, you know, in the middle of the night. So when the waiter delivered to me the chicken, so-called the chicken, I told the waiter, I didn't order a pigeon. I didn't order a pigeon. What does it tell you? You see, China has 1.4 billion population, okay? And you simply have not sufficient food to produce, or the meat, okay, or the meat is not grown enough, the animal is not grown big enough, they need to slaughter. Why? Because just insufficient food in China back then. And because of that, there emerges company that come out with, you know, research, have done a good research to come up with good animal feed. All right, we come up with good animal feed, we come up with good aqua feed, you know, to make sure all these animals grown in a way faster manner, healthier manner, and actually is more resilient to diseases. Okay, so it has all this kind of company happening, and they also this company also help to breed animals, right? Things like your shrimp or prawn breeding. Okay, and because of their success in China, this company have actually expanded overseas. Okay, they are breeding shrimp everywhere, practically almost everywhere in Asia, including Malaysia. This company is present in Malaysia, that actually they are breeding shrimp in Malaysia. Okay, and the shrimp is actually quite good, okay, quite big. Okay, next slide, which I always has been sharing. Okay, sorry, before that, I will say, next slide, sorry, the Monica one, yeah. How many of you have seen this particular sharing, okay, during the lockdown, our early last year, okay? And this is a Polish author. What she said is that the vaccine should be tested on politicians first. If they survive, the vaccine is safe. If they don't, the country is safe, right? So what I'm trying to share with you is that I'm not sure how many of you agree with her. I'm not sure how many of you agree with her, but if you were to agree with her, I will share with you the next slide. How much do you trust the Chinese healthcare products? Look into this. In October 12 of October 2020, President Xi Jinping in Guangdong area do a walk around. And do you notice the people surrounding him does not wear any masks? All right, including the picture down there that Xi Jinping is talking to a very old uncle as well as the kid. Xi Jinping in the video actually touched the kids and the uncle, right? In the midst of the second wave, third wave, everywhere in the world of COVID-19, Xi Jinping, the most powerful person probably in the world, is walking around with huge crowds, hundreds of people without wearing masks. That is one thing I'd like to catch your attention. And second one, on your right-hand side, look at your Chinese Foreign Minister, Wang Yi, right? He has been doing a tour to Europe in the month of August and September. And you still recall, in the month of August and September, or until today, okay, the number of cases of COVID-19 has been growing. It has not shrunk and has been keep growing month after month or day after day. Despite that, a minister is doing a tour to Europe. And subsequently, the minister also doing a tour to Southeast Asia, including Malaysia. And if you recall, October is where we were hit by the third wave. And yet, he actually came to Malaysia. My question to you is that, how many global leaders have you ever seen that they actually do a tour around the world in the midst of pandemic? What does it tell you here? Right. So in the next slide that I'd like to share with you is this particular company. This is nothing to do with COVID-19. Yeah, let me just share here. I put a caveat here. It's nothing to do with COVID-19, but this company has been coming out with vaccine for influenza. I think you all probably recall early 2020 or late 2019. There were influenza pandemic around even Malaysia, right? And also, what happened is that they actually produced nasal spray, meaning the spray without injection. You just have to spray, okay, of a vaccine, kind of vaccine. They have been doing that, okay, and it's a very successful company. And on top of that, this company is also specializing in hormone injection, which is an injection that probably you heard about some kids that are not able to grow. They are not able to grow tall, or the size is always limited growth, right? A very good example will be Lionel Messi. For those of you who are watching football, you know that. So there is a way to overcome it, is by injecting hormone. And this is a company that does that. And of course, on top of that, this company also do IVF, right? So this is a company that actually be invested in. Although this is not a huge mega company, but this company is already making profit. Okay, that's about a bit of the sharing. And now I would like to share with you, the fund is finally here, the United Great Dragon Fund. And this fund is all about the innovation, and it's all about investing into the China's tomorrow, right? Next slide. Since the inceptions in late 2019 in Japan, in Singapore, this fund has actually outperformed any China indices around the world, right? Ever since 1st of August 2019 until, I think this slide is not updated, it's only until October 2020, the fund is up about 96%, okay? Versus MSCI China, which mainly predominantly the offshore China, is only up 32. CSI 300, which is all China A-share, up 28. Shanghai Composite up 17. And Shenzhen Composite, which is make up very much tech a lot of more tech company, up only about 46%. So that has shown you the fund performance. And to share with you, the next slide is that what about comparison with the peers in Malaysia? I show to you over here the entire year of 2020, the performance of this particular fund versus most of the China fund in Malaysia, right? I have Fund A1, I have Fund A2, which is the domestic onshore China fund. And I also have Fund C and Fund M, which is the offshore China fund, meaning investing into your H-shares, your ADRs, right? And you can see for the whole entire last year, the fund is up 96% in US dollar term. Okay, in US dollar term, compared to the nearest peer, which is up about 67%. So this fund is like a 1/3 outperform the closest competitor that you can find in Malaysia. And you look into the next slide. Ever since the fund's launch in 1st of August 2019, that is how much the accumulated return has this fund been brought 140.86%, or almost 141%. Okay, compared to the closest peer that you can find currently in Malaysia is about 93%, which is another 50%, about 50% outperforming the closest peer in Malaysia. So this is the performance of the fund. Right, next slide. So these are the fund information. I'm not going to go into detail, but the good news to announce to you is that this is not a wholesale fund, it's a retail fund, meaning anyone can invest, including myself, which is not a high net worth. I can invest. I still can invest into this fund, right? And the share classes that we have over here is MYRH, Renminbi H, and US dollar H. And to share with you all these three share classes, all three share classes will benefit from renminbi appreciation. I think if you all still recall what I have been always saying, people has been always keep asking me since 15 years ago when I do public seminar, tell me one particular investment that I can put in, for sure I will make money, right? Of course, I cannot say for sure, but I will tell them, I personally, I will put my money into renminbi, which I'm very, I would say I am very positive on renminbi, because what I felt is that this is a country that's soon to be a superpower in the world. Okay, the currency cannot be so weak. And the second thing I'd like to share with you is that today, so many countries around the world has been printing money, right? If you still recall your duit pokok pisang analogy, the more money you print, the more the money loss its value. The more you print the money, the more the money loss its value. Recall duit pokok pisang, when the Japanese were so greedy, keep printing, what happened is that your grandmother, my grandmother, or your great-grandmother, or my great-grandmother has to bring a coolie to the wet market just to buy their vegetables back then, because the money lost its value. Okay, today the Americans are printing money like nobody business compared to China, right? And if you think China is supposed to be bigger than US economy, and if you think China has managed their currency very well, okay, China's currency shouldn't be 6 times bigger compared to US dollar. Okay, and that's my take. So, all right, the next slide will share with you a little bit on the fund information that is on the sector allocation. So just like, like I shared, when I said about innovation, you always thought about the first thing in your impression will be IT. And you look at the sectors allocation, the sectors are not only on IT. IT only accounted about 18% of the portfolio, right? You have many other sectors. It's quite diversified portfolio, right? And the fund size currently that we have after 1 year is about 300 million Sing dollar. That's in Singapore. Right, and to add on to you, how does the fund perform very well, and how who is behind the fund? On the next slide, this is the fund manager. The fund is owned by UOB Asset Management and is supported by our sub fund manager, which is our partner, When I say our partner means there is a shareholder partnership. Okay, that is Ping An, right? Ping An Fund. I think you all know about Ping An. Okay, in China there is something called Ping An UOB Asset Management. There is a joint venture between Ping An and UOB Asset Management, and they're our advisor for that. On the next slide is on the fund manager in Singapore. So he's Wen Jie, right? And I'd like to share with you how about Ping An. Ping An will be Watson Lee, all right, and he is a CIO and head of equities in Ping An. And let me share with you, he joined Ping An Funds back in 2018, right? And prior to that, he has been managing an equity fund in China that is ranked the second top position fund in China. The second top position equity funds in China, right? He has been managing that fund and it was awarded. It's an award-winning fund that he's been managing. So you can see he is here now managing this particular fund. And next slide. These are the resources that is having from Ping An. Watson, there's a team on the fund equity investment side. And of course, he's supported by, I lost count, the team of the research. 13 people from the research team from various industry, and these are the people that is based in China. For China Fund, like I always say, for those of you who have known me for long, I would never believe someone sitting in Hong Kong managing a China A-share fund, right? I cannot believe someone that's sitting in Hong Kong managing a China A-share fund, because China is a huge market and there is a lot of different culture. You need the local people to be there, and for that you have Ping An for this particular fund. All right, so with that, I will end my presentation over here. Hope it's not too long, and open the floor for any questions. Back to you, Andrea. Yep.
So yeah, thanks Edwin for your sharing on the China market and also the fund strategy. So as a reminder, audience are welcome to join us in our discussion by posting your questions with the chat functions on your screen, and we will pick up some of the burning questions for our discussion. So I saw a lot of questions over here. So let's start with the first questions over here. So first question is, when would China intend to open up their market for investors to invest direct into China? So what's your view?
Okay, wow, someone, Alex, right? I think someone is so hungry to invest in China. All right, technically China has been opening up today, but I think it's okay. You can get a license to actually invest into China A-share itself, yeah. That's called RQF. But then this RQF is still very much limited to institution, right? It's kind of hard for you to buy direct. But if you really want to buy direct into A-share, there's another route you can go through, is the through train from Hong Kong. So you can go Hong Kong and buy not all selected China A-share stocks, right? There is a way. You can get a broker to advise you on that. Next question.
So the next question is, what are the strong points of this fund compared to all existing China funds out there?
Well, you put me on the spot now, Tony. Okay, probably I will just share. I won't want to say anything bad about other China funds in the market. I think most of the funds in the market have their own competitiveness and their own competitive edge. But I would like to share with you on how we differentiate ourselves compared to most of the funds that you can see in Malaysia. Most of the China funds you can see in Malaysia. First thing is that it is ADR. We are A-share. We are not the offshore. We are the onshore market. Second thing is that it's a retail. Anyone can invest, meaning you don't have to declare that you're high net worth to invest. And of course, when it comes to strategy-wise, is that we are actually investing into the future of China. So if you believe what I shared with you, the future of China is all about innovation, right? So that is something that a fund can offer, our fund can offer.
And the next question here, yeah. Would the ultra high debts be an issue with China market because recently there have been bond defaulted by big China companies?
Okay, this has been honestly, this has not been a new issue. Okay, ever since 2006, the Western media has always been playing out this. China is heavy. There's a lot of debts in China. China, the debt is not sustainable. It's gonna be a balloon. That is since 2006, my dear friend. That is about 15 years ago. Okay, if you are buying on that idea, you could have missed a lot of opportunities in China today. That's one. Second thing, when it comes to the debt in China, and let me share with you, the debts are very much concentrated with the state-owned enterprises, meaning those that is province, the companies that's owned by the provinces or some owned by the semi-government, But if you really zoom into the private sectors and you zoom into the household, the debt level is still very low. Remember, as a Chinese, we have always been brought up we were told when you were grown up, ever since you are grown up, if you make 100 ringgit a day, you make 100 ringgit, okay, make sure you save 50 ringgit. You had been told, right? And Chinese love savings. I've shared with you earlier. Chinese love savings. That is one. On the concern on the recent debt default in China, let me share with you over here. In about less than, I can't recall the year, but it's less than 10 years ago, the foreign media or the foreign fund managers or even the foreign government powers has always criticized China creating an artificial bond market in China. Why artificial bond in China? Because they don't allow the bonds to go default in China back then. And what they say is that, no, you're supposed to liberalize your economy. If you want to liberalize your economy, your financial sector, you should let the bonds to default. You cannot keep supporting it. That is what being told. And China follows suit. And what happened to today? Any bond default in China, it was being played out in a big manner. And let me share with you, bond default is only not happening in China. Any country in the world will also has bond defaulted. That is very common thing, right? So that is something I'd like to share here. Hope I answered your question.
The next is, why invest in China now while China Air has already went up a lot? Any further catalyst?
Okay. We have always also tell the investor, okay, our strategy ever since late third quarter, we also have told investor, okay, position a bit on yourself on those that is COVID-19 bash down stocks. For example, banks, tourism, right? Meaning your hotels, transportation, airlines, right? We have told investor, position it. The reason why is because you are seeing vaccines coming in place, and these are the potential going to go up. Of course, back then, all these stocks are still very much underwater, very badly bashed down. But investors, technically, they want to go after technology stocks, which is already skyrocket, right? So investors likes that. But today, if I were to ask you, between buying into the laggard stocks, the bank, the tourism, the hotels, as compared to technology, which one's easier for you to buy in? I believe most of you will tell me technology, but easily technology has went up even higher. Right? That's the first thing that I'd like to share with you. Second point I'd like to highlight here is that when you invest into this China fund or invest into the current A-share fund, you are not talking about investing for the next 6 months or 3 months, 3 or 6 months, but I'm talking about you are investing for a long run. Remember, I shared the MIC 2025. MIC 2025 is just 5 years from now. And from there, you were supposed to see more and more powerful, innovative companies in China in making, right? You are not going to invest only for 3 months or 6 months. You are investing towards 2025 or even beyond, okay? There is no timing that you have to be worried at this moment for China.
Okay, before I start to ask another question, so dear audience, you can download our PHS and brochure from your screen. So the next questions is how do you manage risk exposure on this fund should Dow face a steep correction?
All right. For China Asia, let me just share with you. There are two resiliency that you are seeing in China Asia. One thing, the correlation of China Asia compared to the global market is very low. China is living on its own zone itself. China Asia, I'm specifically on only Asia, the onshore China market. They are living on its own. They are not really well connected. You can track every single day. If Dow Jones perform up, what will happen to Asia? Asia might be down. Okay, if Dow Jones were to down, what will happen to Asia? It could be up. The correlation is not very strong. Remember, the reason why is because Asia is very much domestic-driven market today. All right, the foreign participation is less than 30% in China, Asia. Okay. Second thing, the other resiliency about China, Asia that we have seen, I can't confirm this, but in the last 6 months, what we have been monitoring on Asia is that apparently the Asia is a little bit more resilient as compared to before when it comes to the US-China trade tension, right? They don't really, they're really immune to it in a way. So that is the two resiliency that I like to share.
Is this large cap or small mid cap in Asia?
It's all cap. It's all cap. We don't specifically goes into big or small cap. But let me share with you, for any caps that we buy, the key important thing is that it has to be liquid. So meaning we must able to exit in times of suddenly something pop up that you really need to liquidate it. You have to be able to liquidate it.
Okay, there's another audience, same name as you, Evan. What's the volatility rate compared with all the Asia's peers?
Okay, I don't have the wall numbers over here simply because the fund is less than 3 years. The target fund is less than 3 years old, so I don't have the wall over here. So, but then again, the chart itself, I think it's a bit hard to measure the wall. Reason why is because ever since the fund launched in August 2019, the fund has been like one straight line up. So it's a bit hard to measure the wall over here. But you can look from the chart itself. If you've seen the chart over that itself, that they can see the expected wall from there.
China government has announced that they will allow Chinese companies to exercise a massive new share issuance. Would this be a worry as it may cause dilutions of share price?
Definitely. If there is a new share issuance, definitely it will cause dilution. Of course, it's going to affect the share price itself. But let me just remind you on this one. Most of the company that is very innovative, you know very well, it has to be an entrepreneur owned. The entrepreneur, the person who running that particular business normally owns the company itself, right? If he does any new share issuance or recapitalizations, he has to also bear in mind it has to really benefit the shareholder because he's also probably one of the largest shareholder over there in there.
Okay, there's a question from James. Yes. What's your opinion on conspiracy theories on China market is a bubble? Since there is no separation of power in China.
Okay. Let me share with you. I was one of the participants in launching the first China fund in Malaysia back in 2000, if I recall correctly, in 2007, right? More than 13 years ago. I was one of the earliest pioneer in launching China Asia Fund in Malaysia. And ever since the day that I launched China Fund, there has been people telling me China market is a bubble. China market has bubble. And has the bubble been burst? I wouldn't say burst. It did have some correction, same like any other market in the world. But if you have been believing on this particular theory, you seriously you just look at the chart itself, you really have missed out a lot of opportunities in China, right? That's one thing. Sorry, the next question that he was asking was that since there's no separation of power in China. All right. Separation of power, agreed, because it's not a democratic country. But then again, the question now that I throw to you is, you want a democratic country to run an economy, or you want a central control, right? So there's no right or wrong. There's no right or wrong. You have seen that if a central run government or central run system, it could be wrong if it's led by a wrong leader. All right, there's no doubt. If one day Xi Jinping has become very corrupted, he does all the things for his own self instead for the country, yes, there will be a downfall for China. But then let me ask you this question. You have seen country that's run by in a democratic manner, many countries, all right? How does it fare? Look into the US economy. Look into the US government. 2 days ago, what happened to the US government? What happened to the so-called parliament of the US parliament? Democratic. Okay? Look into Hong Kong. Look into Hong Kong. What happened last year? Right? Because of democratic, follow the rules, there is no stern action coming from the government to control the riot. What happened to Hong Kong? So I leave it back to you to judge.
From Xizang, hi, that United, I think it's referring to this fund. So United Great Dragon is available through which distribution channel?
The one that have signed going to sign the agreement will be Phillip Capital. Poems, I think you probably heard about Phillip. And I think the other one that is soon that you can find it available will be UB Kayhan platform, right? You can see that. And of course, as we are speaking, I mean, today is the second day of the launch, and we are seeing more and more, of course, there are more and more distributors are coming on board. So I won't announce it at this moment, but from time to time, you will probably see that. So for those of you who has been connected with our WhatsApp, you probably will hear it from time to time, who will be the distributor or this fund is being available in which platform. I think let's go for the last final question. Okay, let's go for the last final question because I think I dragged you off for many too long-winded already.
Yeah. Okay. So from Ginseng is hi Erin and Ra. So when will this fund be available in iFAST? So minimum initial investment is 1,000. Is it? How about minimum subsequent investment?
Thank you, Ginseng, for your interest in this fund. Yes, the minimal initial investment is only 1,000 ringgit. Yes, to be frank, I'm going to put my own money in there as well, right? And of course, the subsequent investment, because it's a retail fund, so it's only 100 ringgit. So yeah, it's quite affordable for anyone to invest. So which is why I'm saying, even me, I can afford to invest. So yeah, you don't have to worry about that. On your next question, when will this fund be available in iFAST? I think I can't comment over here. We'll keep it informed from time to time when it's available. All right, so that's it. I think we have taken very much a lot of your time. Hope I don't bore you for the last 1 hour and 19 minutes, right? So yeah, just feel free to play back some of our videos they can find in YouTube, 1 Minute Insight. You can see, to get some ideas how the market about. And of course, for this particular fund, just feel free to contact us or my colleagues around if you want to know more information.
So before we end the sessions, do you have anything you want to share to them?
Nothing. Just to wish all of you Happy New Year. And if I won't see you again on air before Chinese New Year, so I wish you 恭喜发财 for 2021. It will be a better year, definitely, for us.
Okay.
Thank you.
Insightful session. So
Thank you.
let's come to the end of the sessions. Once again, thank you for joining this webinar. Stay safe and stay healthy. Thank you. Bye-bye.
Bye-bye.